Hello everyone, Darren at Leviathan here, talking to you from the CME short interest rate trading floor. Anyway, before I go into one about some of the earnings that we got coming out, just a quick look at what's going on around the world. Basically not too different from the open. Crude, which seems to be the leader of things these days, is off $3, well off of its lows, and not quite back up to where it was previous session, hovering around there. Fixed income has had a bit of a lift again, though, off of its highs. 10-year trading 109.24, as you can see, they're up half a point, with the yield back to 4.5%. On the shorter side of the curve, we've got the DECE contract pricing in. Let's have a look. 92% chance of a hike by the end of the year. So I don't think everything is back to normal, and it is still, there's still a lot that will filter through on the back of even whatever is agreed for the war with Iran, and even with the US Navy guiding ships now through the Strait of Hormuz. That is basically the latest. The Israeli officials have also said that any plans to attack Iran are currently ruled out, following the US message over the weekend. So yeah, let's see what happens there. Iran's still insisting on receiving some of its frozen funds, so that was a big sticking point for them. We'll see how that pans out. Probably going to end up being, we'll give you a percentage. However, that's still what's leading things. But let's go to look at, because there's not really much else to talk about that we didn't cover this morning, other than the two earnings we have coming out tomorrow. Marvel Technologies, which, as you can see by this chart, has gone on a rather large rip to the upside. I don't know too much about them, but then I don't have to. It's options, which is a mathematics game. So what we're going to have a look is downside and upside play. Looking back at the chart, a potential pullback could go as deep as 160. And again, we are not looking to have this happen on like Thursday. We're looking to capture trends out of these earning numbers. So if the earnings are shit, the trend will follow accordingly, but it's not going to happen immediately. I can't stress this enough. We want to keep you in the game. That's the point. So what did the system pick out? We'll go pure vanilla on these. Initially, as I said, because the system does a billion odd iterations, it's going to pull out some funky ratios like you see here. But for these videos, we're going to go click on the old vanilla button and go to what may not be as an exciting return on the trade, but is still a good trade. And the one that our system pulled out as its favorite here is this Condor, the 145, 55, 65, 75 put Condor below the market. So just trading for about $1. He likes that one the most. The most likely scenario of winning versus losing. It doesn't necessarily monetize very quickly, though. This one, you're going to have to wait to see it here. The value of it it's in its 30th percentile compared to the same equivalent out of the money options you're talking about before. So this one is definitely a kind of longer term play. You're not going to see real money coming from this one for about a month. It's got the least chance of losing compared to the others, i.e., you'll still be in the game when it's marking at 82 cents. It's still probably not going to change in value at all, regardless of what the outcome of the earnings are. But yeah, it's not going to blow your socks off straight off the bat, but it does like it longer term. I'll just keep going back here. Failing that, you want to see something that monetizes more quickly, I'd move it down to here, which is the 160.70 put spread. As you can see here, you'll start to get that one come in very quickly if we do go down there. Now for the upside though. Again, just looking at the more vanilla options. And personally, although there's some good ones here, and this condor here you see down here is going to give you the larger return, you have to be fairly accurate as to your target price. It doesn't go past it. Whereas we're picking out some of the cool spreads here to do. I kind of like this one here, but it is quite expensive. It's $8.50. So you could definitely say here is leaning to the upside because there's not really that much value. As you can see here, the expectation for the numbers isn't like, overwhelmingly a huge move on the back of it. We're pricing in a $19 range for that. That's what it's implying compared to around 12, which we normally get. So I guess historically the numbers spikes haven't been that huge or haven't been that necessarily as big for this particular company. However, keep an eye on it. As I said, in the big moves there, we like that fly to the downside, call spreads to the upside. The other company that has something out tomorrow is Salesforce. So let's have a look at them. Their chart is horrible, as you can see here. I'm guessing the advent of AI has seen this not perform as well. And so let's have a look on that one. I did like, your trend is your friend. And if it continues to go down to the 2023 low, which is around 130 target area, what does it like? And I kind of like this one. This one gives a higher return purely because it's a bit cheaper. But I kind of like the one that has the highest strike. It's my personal choice more than anything else. Is a little more expensive at $1.55. We're looking at this one here. But it will monetizes well. I mean, you're getting in at $1.15. So if you get the direction right, even initially, you're going to see a reasonable return on it. A good like 60% effectively return on it. Value wise, it's kind of it's just above average. Same equivalent out the money strategy that is the same as this out the money fly. Comparatively, the 64th percentile. So it's kind of hovering around fair value. Looking at expected moves, this one's a bit more. We're pricing in a range of $11.50 for the numbers out. This one compared to 7-ish that we normally get on an average daily expected range. So there you go. That, if you haven't seen it, we'll just recap there. Just going in the fly hit. That's my choice over this one. The 140, 115, 130, 145 put fly. This is December expiration, so you're going to have plenty of time to play with this one if it doesn't pan out with your initial move. And then just going back to Marvel, our upside targeting 225 didn't give us too many exciting strategies, but on a vanilla basis, I like the call spreads, the 195, 220, but it is a bit rich, $8.5 on that one. So reverting back to downside plays, any pullback, we like doing this condor with the 175 strike at the top strike. Other than that, that's about it, really. So, as always, everyone, better be lucky than be good. So, best of luck trading to you all.